In the past 10 years, we have witnessed a major shift in global financial behavior. The adoption of digital payments has skyrocketed, becoming an integral part of how we conduct transactions worldwide. This transaction to digital has opened up new pathways for convenience and accessibility for both business and consumer. However, this rapid advancement has not been without drawbacks. We're seeing an increase in attack surfaces, creating a fertile ground for fraud. Indeed, we are now experiencing record levels of fraud, a stark reminder of the vulnerabilities inherent in our digital financial ecosystem. Interestingly, while payment solutions have evolved at an accelerated pace, secure identity verification and fraud detection tools have lagged. The speed of change in the payment sector has outpaced the tools we have to ensure sufficient safeguards. Welcome to IQT Explains, a series on the IQT podcast where we explore technology trends and their impact on national security to provide insights and unique perspectives from thought leaders within IQT. I'm your host, Vishal Sandesara, and today we're going to explore new capabilities in Fintech. Joining me on the show today are my two colleagues, Rita Waite and Ming. Rita is a principal on IQT's investments team, primarily focused on AI and Fintech investments in enterprise software companies. And prior to working at IQT, Rita was an investor with both Juniper Networks venture arm and Samapa Next VC. And she led payments and strategy and innovation at Millennium BCP. Ming is a vice president within our enterprise technology practice, where he investigates emerging technology spaces, including financial and identity intelligence and agile IT infrastructure. And prior to joining IQT, Ming was a research engineer at BAE Systems, focused on wireless networking and cyber ops technologies. Rita, Ming, welcome to the show. Thanks for being here.
Thanks, Vishal.
Thank you, Vishal.
So before we sort of dig into the nuts and bolts of a lot of the great research you've done in the fintech space, why don't we first sort of start with why is looking into this space even important in the first place for our listeners who might not be familiar with what fintech is and perhaps how it already is a part of their lives? Why don't we start with just a quick overview of why this topic is important and why you all did some research? And Rita, we'll start with you.
Absolutely. So the way that we think about fintech, which is really financial technology, is that the penetration of digital payments globally has really changed the way that we interact with money, right? And financial services are fundamental to the way that the economy works, and it's part of our everyday life. And over the last sort of 10 years, like you were alluding to, we have seen this massive adoption of digital payments, and that has changed the landscape. And we find that, the being able to ensure that these new technologies are still safe and secure and allow us to, continue to, support its growth, it was important for us to look at and say, okay, so how has this landscape evolved, right? We went from, a financial crisis where that led to the growth of all these companies building alternatives to traditional banking, right? We saw, from 2008 to 2018, just a massive growth. And then since then, we had a pandemic that massively accelerated the adoption of these tools. And now all of a sudden we have maturity, right? We have maturity and adoption, right? Like, so tools were secure enough for folks to start to use it. But now that we've reached scale, that's opened up a whole new set of threats, a whole new set of, different considerations, different regulatory environment. And so it was important for us to think through, okay, if this is all changing, how does this impact our government partners? How does this impact our everyday lives? And sort of took a stab at looking at that.
That's great. And Ming, Rita mentions, sort of a catalyst for the expansion of the industry, and she mentions the pandemic as one of those. I certainly know from my own personal experiences, I relied heavily on cashless payments during the course of the pandemic. But maybe a little bit prior to then, what were some of the catalysts that you saw in your research to the growth that this industry saw, prior to, say, 2020?
Yeah, absolutely. Well, ultimately, excuse me, it comes down to convenience, right? What people are really looking to do is just live their lives, right? And if there exists an easy and convenient way to help them live their lives in a more comfortable way, they'll go for it, right? And that's what's really happened with the digitalization of our financial services, right? It's a slow transformation, starting from more in-person services and actual handwritten entries, checks, so on and so forth, right? And we've really digitalized that into the mobile form, right? So now you can pay with your phone, you can pay maybe even with your face in some cases, right? Just showing your face. These are really nice conveniences, and it really does require the underlying technology to provide both the convenience and the security, because that convenience can quickly sabotage you and turn into something that just allows other people to steal your money.
Yeah. So in your research, I know that you both spent a lot of time sort of thinking about and reflecting on the growth of this industry over the last decade and perhaps even beyond. And I believe you came up with sort of, there's phases, there's sort of a versioning scheme that you've applied, Fintech 1, Fintech 2.0, Fintech 3.0. Can we talk a little bit about just at a high level what was important in each of those phases, and maybe even talk a little bit thereafter about where we might be headed just shortly into the future? And Rita, we'll start with you.
Yeah, so I alluded to it a little bit in the beginning, but we had a financial crisis in 2008, right? And so that led to what we call our, the rise of new fintech platforms. So you can think of the Stripes. It was when Bitcoin was actually launched. Wise, which at the time was TransferWise for international cross-border transfer. So this growth of alternatives to traditional banking and a new launch of mobile wallets and crypto. So that was sort of your fintech 1.0. And then from 2008 to 2023, 2018 to 2023 is what we call fintech 2.0, right? And so this to us is the global adoption of digital payments, where it's more convenient, it's more accessible technology. You have mobile and contactless payments, just like Ming was referring to, where you can pay with Apple Pay, Google Pay, and it grew beyond just their initial markets, right? So these couple of years were crucial. And, you reached a point where 4.4 billion global digital payment users in the world in 2023. So we got to this point where, all right, now we have, adoption. And so we get to today, which is where we're calling sort of the fintech 3.0, which is very much, fintech maturity. We have the penetration of digital payments, but then we also have record fraud. We got to that sweet spot of convenience and enough security to make it happen. But now it's changing the way that the landscape looks, right? So we're expect to see more consolidation in the space, new data governance policies. It really matters how you do that. Regulation has deferred very variously across the globe. And so for us, it's sort of this, 3.0 view of, all right, now that we're here, how do we ensure that it's secure? How do we ensure that, convenience doesn't trump security, and we can continue to sort of move forward and continue to use these technologies without giving up, something, right? Like fraud over the last 5 years has grown dramatically, right? We've reached record fraud this year, and it's clear that it's not happening on the physical card present transactions. It's on the online ones, right? So be it through credit cards online, buy now, pay later schemes. Obviously, you have crypto as a additional segment to that, but it's just a new world. And now we need to ensure that all these technologies that we've built over the last 10 years can be used securely.
And Ming, before you comment, I want to sort of pepper in the fact that, long before financial technology companies, long before fintech people, some of our listeners even may remember days where you paid perhaps with cash or with credit card in person. There was no smartphone there to sort of aid in or complete a transaction. Question to you, Ming: How much of what we foresee as potential safeguards in the face of all this ever increasing availability of fintech solutions, how many of the safeguards that we look to apply now are just rinse and repeat versions of the safeguards that we've already put into place? In other words, reinventing the wheel, is it really necessary, or can we sort of rely on age-old methods we've been using since before digitization for safeguards? I ask you that first, and Rita, I'd love to hear your comments on that thereafter.
Awesome. So I would say this is definitely a very mixed bag, right? You can rinse and repeat certain things, and in most cases by concept. So the concept of trying to protect access to, an account, that comes from the whole like, hey, look, there's a banking account, a checking account opened at an actual bank location, right? You can abstract that up from there to a purely electronic type construct with just a website account, right? And still keep trying to secure that using the same analogies. But once you start opening up cyberspace, something that is globally prevalent, right? Something that has a global attack surface, it becomes much more interesting. And some of the old paradigms that we could rely on become flawed, right? In the end, everything is a cat and mouse game that will just perpetually go on, right? But ultimately, it's about adapting to the actual space you're working in, previously largely a physical space, and now largely an electronic and digital space where things definitely do run by absolutely different rules.
Rita, same question, your
Yeah,
perspectives.
I think just to build on that, if we take even identity, which was a big part of the research that we did, is how do you verify that you are you, right? Like how do you ensure that you are the person that you say you are? Where before you would go into a physical location, you verify with your document, and you might even do a one-time passcode to your mobile phone, get an SMS, and that's how you did it. But when you're doing all of this digitally, there has to be more, right? There has to be an added layer where it's not just about you, it's about your device, it's about your identity online and what is your behavior. So you start to see, or not to see, but to need more touch points to verify you, because it's just so easy to pretend that you're not, right? Like you can spoof a cell phone number, you can, come up with brute force addresses that'll work on that credit card that you also sort of guess, and brute force through. So it does change. I think that to the question of can you just use the same, it's not enough.
Understood. You both have touched on this concept of identity, and we're going to talk a lot about the need for adequate ID and fraud detection tools. But before we dig into that, just when we're thinking about identity, oftentimes you think about a financial transaction, and my naive senses tell me there's really two people at play. There's a person who's paying, and then there's a person who's receiving. But you both have uncovered a whole host of characters in between, especially when you're thinking about digital solutions. Let's talk a little bit about how we move money and who moves money when we're thinking about fintech. And maybe I'll address that to Ming first, and then Rita, I'd love to hear your thoughts thereafter.
That's an excellent question. So traditionally, we're very used to using centralized authorities to help us move money around, right? When you think back to ancient times with the Knights Templar, helping with the concept of having a bank account and being able to put money in and take money out later from a different location, that was a trusted central party helping you out with that. We've expanded upon that, of course, beyond just the purely physical to electronic forms of that same concept. But more recently, starting, around 2009, is when we started injecting really interesting new concepts like decentralized currencies, like cryptocurrencies, like Bitcoin, Ethereum, so on and so forth, right? Purely electronic, purely decentralized, with no trusted authority to actually handle the processing of these transactions and also the recording of these transactions. So there really is a wide attack surface when it comes to some of these new concepts, which is why, to Rita's point, we can't protect them in the same way that we've done in the past, right? The spirit is there. Like, you need to protect the identities of people involved in these transactions. You need to give them the ability to send the money, but you also have to protect the fact that you don't want anyone to be spending your money, especially when everything is literally, totally, 100% on the internet.
Yeah, and I would add just how different payments are globally, right? I think that so what we're traditionally used to in terms of whether it's card networks, right, your Visas, your Mastercards, or it's your account, like your bank account, you do ACH, and you have real time payments through account based as well, or through your smartphones or traditional cell phones and on cellular networks. These are all the ways that we're sort of like used to paying. Like those are the rails that run underneath. And what we're seeing now is a continued growth in that, right? So you have hyper localized payment rails for regions. And then you also have to have that interoperate with your global rails because, again, payments are global by nature. And so it's an incredibly complex space and full of very different intricacies for each different region.
Got it.
Yeah, I totally agree. And I would add that because of the diversity across the globe, what that really means for us is that when we go back to what you were talking about with the FinTech 1.0, 2.0, 3.0 concept, right? Just breaking it up into phases. It's important to remember that the entire globe runs by its own schedule. So there are definitely parts of the globe that are farther along down that path, and there are other parts that may not be as far. And also those cycles actually do cycle internally. So you might get full adoption on one particular type of technology. Think credit cards, right? We're definitely as far as we're going to go with credit cards now, right? And we're recycling on that. We're disrupting that. We're bringing in interesting new services and concepts like Venmo and Zelle and so on and so forth, right? And all of this while the rest of the world is running at its own pace. So it's really important to understand it's a global community, and everyone doesn't necessarily march to everyone else's pace.
So we spent a fair bit of time talking about sort of the industry as a whole. And I know that you both have spent a lot of time thinking about and taking a look at in your research what's being done in providing solutions to fraud, solutions to identity, and building trust, building a sort of a foundational layer of trust in some of these tools and utilities that we've all become accustomed to over the last couple of years. I'd love to hear a little bit more about what you're seeing. What are some of the techniques that you're seeing companies develop to sort of further along the objective of becoming more safe online for their consumers, and also what's coming down the pike? Like what are some of the things that aren't quite there yet, but you anticipate will be there to, again, make people like myself and our listeners feel safe about using some of these tools? Rita, we'll start with you.
Yeah, so I'll take just one step back and think about what is driving fintech as a whole, right? So when you look at the private market and financial investment into fintech, right? So VCs investing in startups, it's very much driven by the opportunity that exists for bringing the underbanked and unbanked online, right? So it's being able to serve that community, and technology can do that really well. Right. And so in 2021, we had record level investment into fintech, 140 billion or so that year, which was obviously an abnormal year. We're back down to sort of, half of that, but it's still most that we've ever seen over the last 10 years. Right. And so there's just this massive opportunity on the fundamentals of still bringing better solutions to bring the unbanked and underbanked online. So that's the primary driver on sort of the commercial side. I think fraud and identity, and that's a component of it, right? So sort of like, now that we have these solutions, how do we do that? And I'll let Ming comment on some of the other techniques, but there's a lot that has to do with behavior. So how identifying user behavior, being able to do pattern matching, be able to complete a profile of who you are and the device that you have that is much more robust than just, like we talked about, like sort of like your ID and just a phone number, right? And as we look at sort of the market more broadly, it is really impressive to see just how much, payments evolved. And now we're seeing that happen with fraud and identity coming right behind it, right? And so that's sort of like the trends, at least, that we've identified in looking at this space. But Ming, I'll let you sort of go through the down the pipe piece.
Yeah. So what I would say is, don't forget, this goes back to the prime principles of what are the financial services actually trying to protect. What they're really trying to secure are, I need you to identify who you are so that I can work on your behalf, right? And then, of course, working on your behalf. Am I helping you send money? Am I helping you take a loan? Am I helping you get insurance, right? It's all about establishing who you are first, and then allowing you to come back to access your account or whatever it is that you're trying to access going forward into the future so that you can get service, right? So ultimately, the interesting new techniques that people have been using have been around identifying, hey, is this Ming Lo coming to you and trying to access, well, number one, trying to open an online account, trying to access that online account again next week, and then being able to use that online account to pay someone, to pay Rita some money that he owes her, right? All of the interesting techniques that we're seeing around there are, how do you figure out who Ming is, and then get high assurance that it's in fact still Ming on the other side when you're really coming across a wire, across the internet through a fully digital type of footprint.
Yeah. Because I was just going to say, like, very quickly, it's sort of, if you look at the challenges you still exist today, it comes even to a very basic level, right? One of the challenges that merchants have, right, is that the acceptance rate on the credit cards are low, right? And different regions have different rates, but that's still like the primary thing is, hey, this card didn't work online, and I am me, like, this is my account, but it was declined at the merchant because they weren't able to correctly assess the risk. Or if you want to make a transaction that is, whether it's cross-border or internal, like domestic, how do you get that done? And today there's still pieces of that require you to sign a piece of paper, put it back into your and those are the things that you're still trying to move forward. Because at the end of the day, this is all about risk, right? It's risk assessment, is how much risk am I willing to take on each and every one of these transactions, not just financial transaction, but account opening, maintaining the account, adding someone else to your account. And so even in those friction points, there's still a lot of work to do in terms of, giving us a better experience and being able to secure that component of it.
I see. Both of you made mention of, things you've seen sort of on a regional basis. And I know that you both have also done quite a bit of research internationally, thinking about the fintech industry and the capabilities that are coming to bear sort of from a global trends perspective. As we sort of shift outside of just regions and think more globally, I'd like to hear your thoughts on, what we're seeing in this industry and from where outside of the globe. What are some of the things that are most compelling to other nations? Ming, I think earlier you had made mention of, the U.S. has done great with credit cards, and we've sort of, I think, expanded the abilities and capabilities there. But what about other countries, and who are some of the primary players leading the charge on other perspective or other parts of this industry? And maybe we'll start with Ming and then Rita. I'd love to hear your thoughts on that as well.
Yeah, absolutely. So, other regions, really fast, region to mention would be Europe. There's a lot of acceptance of bank account based, payments, applications. Basically, you have your bank app, right? And you can pay your friend through your bank app. In Europe, that's highly accepted, in addition to credit cards. When you think in specific parts of Asia, basically China, right? You have Alipay, you have WeChat Pay, right? Those are highly accepted. When you go down to the Indo-China area, you have other apps like Grab, which are essentially their version of Uber, and with that comes a Grab Pay app, and those are locally very well accepted. It really comes down to what makes the most sense for your region, based off of acceptance and networks that these services have built. And when you do try to work across the different networks, that's where you really actually run into a lot of regulatory hurdles. That's why credit cards are, on average, one of the more accepted payment methods when you think internationally, even though there are plenty of places that it's just not very welcome in, right? But it's had the most time for a lot of these different services to work its way through the regulatory hurdles such that they actually have the ability to go across global borders.
I see.
Yeah, and I'd add to that a lot of this is driven again by local regulation, right? So in the U.S. we have the approach of sort of less regulation, but Visa and MasterCard, the main card networks, but Amex and Discover also U.S. They're the leaders globally for credit card networks, right? So if you think of Europe as the example, right, the primary reason why they have such a push towards account-based payments is because there is no Amex or MasterCard or Visa that's European, right? And so they want to protect that as well, because at the end of the day, it is a financial decision, and you are relying on multiple foreign entities to move money in your region. And so they've passed a lot of regulation to push account-to-account based payments. They've also pushed a lot of regulation, which is what drove a lot of the innovation in fintech in Europe over the last couple of years, which is different than other segments of the economy. Like it's not the same in other areas. And that's pushed them to, have a different approach to these solutions, right? So for them, security, like securing the customer, has been a huge push, right? So if you want to make a transaction online in Europe, you can't just put your credit card number and your transaction is done. You're going to get a push notification to your banking app to validate that. And that's a regulation, right? And so it's a different approach. It has its drawbacks, right? Credit cards in Europe are capped, like the fees on your credit on credit cards are capped, and that makes it so you can't have all the benefits and all the additional services on top of card networks that you have in the U.S. And that's just to show like the dynamics of the ecosystem and how much it plays from government regulation to users and the fintechs and developers, where China, on the other hand, like completely jumped that entire sort of space and went straight to mobile payments and have, the apps that Ming mentioned, right? You live your life in that app in a way, for being able to get your services, make your payments within that ecosystem. And then you obviously have regions that are still developing, like what is going to be their main form of payment, and it varies widely, right? In Latin America, there's still a lot of credit cards, but it's fragmented. There's local rails. In Africa, the difference between the countries are massive, and so I think it's just it's interesting because you have all this diversity, all these different incentives, but then they all have to work together, right? Because you need to do cross-border payments. And so it's really fascinating. And we've seen that, there's a lot of roles to be played from both government and the private sector.
Rita, you made mention of, how sort of the international or the global competition sort of stacks up, I suppose, in terms of, what are market drivers and where the current state of affairs are in terms of the capabilities offered. I know that you've also spent some time thinking about this from the same security or fraud prevention or identity lens that you thought about the U.S. fintech industry. I guess my question to you would be, how are we doing globally in terms of preventing fraud and protecting consumers internationally, and where does the U.S. sort of rank? Are we as good as a lot of the stuff that's out there globally? Are we sort of trailing behind? Love your perspectives on that.
Yeah, I think it's a great question. There's the part that I think is really interesting, and what Ming and I found is that most of these startups, whether it be in identity and fraud or payments, they think global first, right? So if you can secure a payment here, you need to be able to secure it somewhere else as well. And so there's this global first perspective, which puts us, very high on the ranking. Like, still the biggest fintechs in the world are still US. Like, we're still leading the way in terms of both dollars funded and companies created. And so even though we might not have like the regulation here, we still have to be able to abide by the regulation somewhere else. And so it's a really interesting dynamic in terms of how these companies approach this, because they have to be global first. And so I think that, to answer your question, it's great to see, because you really do have that independent of where the company is based.
That's great. And Ming, I had a quick discussion about just regulation, outside of this podcast. I'd love for you to tell us a little bit about your perspectives on, U.S. perspectives, certainly, but also globally. What are we seeing in terms of regulatory bodies that are governing, some of the applications and the growth that we're seeing in this industry, both in the U.S. and also internationally?
Yeah. So what I would say there is, it is, of course, very different from region to region, right? And to some of the earlier points that we made, things come in waves, right? So when you think about the modern landscape, the concept of KYC, know your customer, the concept of having anti-money laundering processes in place to protect your services from being used by nefarious folks. A lot of that was pioneered, like the formalized policy side was formalized within the US as some of the newer services came out. When I say newer, I mean, bank accounts, credit cards, so on and so forth, right? We blaze a trail a lot in that area. And then we stood back a little bit and enjoyed some of the fruits of our labors. And since then, we definitely see Europe really forging ahead hard on interesting new areas, like formally protecting user privacy of their data, privacy of their identities, so on and so forth. And we see a lot of the interesting pieces being implemented in Europe. And you'll see how it actually goes from policy down to execution when you think about something as simple as credit cards being protected by the chip that comes in modern credit cards, right? In Europe, they use a chip in addition to enforcing that you have a PIN to go with that chip, giving them a belt and suspenders approach to that protection, right? So that's policy working in addition to the technologies coming from individual companies, meaning the ones that make the credit cards, giving you a more protected product. Whereas in the US, simply having the card allows you to use the money, which doesn't prevent someone from pickpocketing your credit card, running off and spending with it. So it's definitely important to have policy go together with the industry and the technology in order to make sure that you secure things in the most convenient and still usable fashion.
You've got me thinking a little bit about how this all relates to consumer behavior or just personal behavior. This imagine if credit card, the chip and pin model that you talked about, I find that to be a very, very robust and a relatively simple system to secure a credit card. Imagine if you lose your credit card, which has happened to me. I've misplaced my wallet or my credit card a number of times. Imagine the less or like the reduced amount of anxiety I would have if I knew that, this card it's probably floating around somewhere, but it's relatively useless without some of the information that I carry about it in my head. I imagine that would create a lot more soothing experience about having to call my credit card company and complain about my missing card and not having to feel like I have to defend any and all transactions that have taken place beyond a certain time.
Yeah, and I will add that it's actually a relatively flimsy protection in the sense that stealing your PIN is actually not all that hard, especially with like the ubiquitous surveillance that comes with modern society, right? But it is a meaningful layer of protection that they added in conjunction with their policies that was really useful. These kind of evolutions need to come faster, of course, but it is nuanced and it is actually meaningful.
Yep. We're almost at time. I want to switch to the tips and tricks section of our discussion. And the tips and tricks section is dedicated to helping our listeners feel safe and secure about their use of some of the tools that we've discussed today, the various fintech tools. I'd love to open the floor for tips and tricks from either of you. What do we do out there to stay safe? What are some general practices? What are some things to keep in the back of our mind? As inevitably, this industry will continue to throw out more and more useful and more convenient things that we use in our daily lives. Rita, over to you for that first.
Yeah, I think so. One thing is that I've noticed there's a huge change is like even on your banking app, and this was driven 100% by the neobanks, was that you can now do a lot of the security management on your phones. Like you can disable your card or you can create a virtual card just for that online transaction. But in terms of tips and tricks and like where I think that we're seeing a lot of the fraud come from are scams, right? And so like getting a text message to, give up information or getting an email that is signed by your boss asking you to, go buy some gift cards. And I think that it's really just a lot of it comes to sort of a little bit like common sense, but also just be extra careful in those instances. Like your bank is probably not going to ask you for any sensitive information through an email, through a text message. But other than that, I do think that we at least have the protection of, since especially here in the US where you're using cards, there is that extra safety that, you can call your bank and you can, report sort of fraudulent activity pretty easily, which is nice.
Yep.
I think one of the most enduring best practices still remains have good passwords. More and more, you'll see that people don't rely on them as much with respect to the services that they have, right? There's two-factor authentication. There's additional factors. There are different ways to sign yourself back in again that aren't actually requiring passwords, right? But ultimately, there's a core set of services that underpin your safety on the internet, and they all require good passwords. Don't use one-word dictionary words to be your password. It's not as easy to remember, but it is the underpinnings of your security on the internet.
Very good. To our listeners, if any of you have a 0000 or a 123456 as your password, let Ming's words be resonated clearly and soundly. Change that immediately. And to Rita's point, some cases of fraud, sometimes making a phone call to your bank is probably your best bet. Rita, Ming, thank you so much for being here today. I really appreciate your time. On behalf of our listeners, we appreciate the research you've done and the insights you've gleaned on us today. And to our listeners, thank you all for tuning in to today's episode of IQT Explains on the IQT podcast. Please make sure to subscribe to the IQT podcast so you don't miss out on future content, and leave us a review or a comment to let us know what you think or what content you'd be interested to see us cover on a future podcast. I also encourage you to check out IQT's website at www.iqt.org to explore more content about cutting-edge technology to support and deliver insights and capabilities essential for national security and mission impact. I bid you adieu, and yet again, to our guests, Rita and Ming, thank you so much for being here. We'll see you all next time.